right, war, politics, stock markets, all there. Liz Peek, Fox News contributor. Douglas Holtz-Eakin, American Action Forum president, former CBO director. I got one for you, Doug. So our friend Kevin Warsh, all right, this has nothing to do with Iran, or at least not directly. Kevin Warsh up on the Hill talking to Senate Banking Committee people, and they like him. They just blocking him. Tillis likes him, said he likes him. He was in Barrasso. Barrasso's in love with him. But they won't follow through, and they get his confirmation hearings. So I have a proposal. I say, Mr. Trump wants lower interest rates. They won't put Kevin Warsh in right away. So Jay Powell calls the president and says, tell you what, Mr. President, you reopen the Strait of Hormuz, and I'll cut interest rates. What do you think about that? It would be the grandest monetary policy strategy in the history of war or peace.
You know, Larry, you have a very, very rich imagination. And, I don't share my fantasies in public for a reason.
I just couldn't resist. I couldn't resist. What do you think the Fed should? I'm going to ask both of you what the Fed should or should not do here.
Oh, I think we know the lesson from doing it wrong in the past, which is they need to look past any sort of short-term oil price spikes and conduct monetary policies as if they didn't exist, because they will go up and then they will feed down, and the impact on the trend inflation will balance out, and that'll be that.
Are you worried about inflation? Are you worried about recession? Do you think the Fed should take an action? I mean, either swapping the Hormuz Straits or not.
I'm not worried about inflation because I think there are too many forces right now that are actually acting against what is a temporary rise in oil prices. Oil prices definitely feed into a lot of things, fertilizers, plastics, et cetera. If prices stay elevated for a long time, we're going to see a problem. But I just don't think that's going to happen. And I think the big productivity push from AI counteracts a great many things that are going on. Also, I think housing is going to be coming down.
None of the tailwinds from one big, beautiful bill and other things like productivity and AI and so on, none of those are gone. We're just not talking about them anymore. They're still out there. Yeah. When this war is over, and I believe it's going to be over in a few, Trump's saying that they can't find targets. And as Aaron Cohn said last night, the Fifth Fleet knows how to take care of the Strait of Hormuz. So I'm not that worried about that. We get back to a what looked like a very powerful economy and stock market.
The Bank of America Institute came out with a very, very bullish read on the last month's spending. I was actually surprised. The fastest spending rate in 3 years, Larry. And this is before the tax refunds came in, before good weather. I know that sounds stupid, but the last 2 or 3 days in New York, when it got nice, the eastern seaboard, everybody was out. Everybody went shopping. I think you're going to have a gangbuster spring, and really just a relief from a lot of pressures that have been on the consumer.
Doug Holtz-Eakin, see if you agree with what Liz Peek is saying. And this is a different kind. Look, this is not a real oil shock. It's not a supply shock. And interest rates never even went up, for heaven's sake. And the duration of this, maybe we'll all be wrong, but it does not sound like we're going to be wrong. The short duration makes this different. We're huge oil producers. We're huge exporters. This is just different. Economists looking at past episodes are missing this.
I think 3 things. We came into the year with a risk on the household sector that I think Liz has exactly right. The fourth quarter GDP, I didn't love the negative on durable goods spending, and to see the first part of this year have strong spending numbers is great. That takes one concern off the table. The employment report, I think, has been badly overread. In the end, we had a strike at Kaiser Permanente and some really bad weather, and if you take those into consideration, it looks like more of the same, and if you weren't concerned before, shouldn't have caused any. And we know now how to deal with these oil price spikes. We know that this is going to be transitory. Larry, I think we've seen the world overreact to this. We're at $100, a little under $100 a barrel. It hasn't been that long since we were there before, and we were just fine. And this economy is strong enough that it will be just fine. And so I'd say, as you said at the opening of the show, that you should just take a deep breath and carry on. And we will let the price spikes go up and then pass through us, and we'll be in good shape coming out of it. That
is my sincere belief. Charlie Gasparino has a great story out. these hedge funds and their algorithms bouncing oil prices up and down over almost nothing. You know, it's a very strange world out there, but we shouldn't be bamboozled by it. I mean, the fundamentals, I hate to coin a cliche, Liz.
Well, and by the way,
fundamentals are awfully
look
good.
at oil company stock prices. They're not up very much. They're up maybe 1% or something. So it's clearly a read on simply a commodity kind of hiccup, which is what's happening. And yes, there was, coming into this year, there was a pretty broad sentiment that oil prices would be drifting down. Oil was an oversupply. So there was a big short position, is what I am told. And so, yeah, you had a reversal of that. And boy, did that play, you know, chaos with the markets. But I don't think that investors who actually know something about the industry are particularly alarmed by what's going on. There's plenty of oil. It's just right now it's blocked.
That's right. That's right.
Well, Larry, can I just remind the viewers of one thing which Liz really said? The prices don't matter. What matters is who buys at that price. You can have a price of $150 if no one's buying there. The costs aren't showing up in the economy, and they're not selling it. That's what the industry guys are saying. That means these prices don't mean that much for the actual performance of the U.S. economy.
Amen. Amen. Doug Holtz-Eakin, Liz Peek, thank you ever so much. Sorry, I'm short.